Welcome back to The Explainer. Today we are diving into a really dramatic event that rocked the financial markets back in January 2026. We're talking about a mysterious and incredibly violent reversal in the price of gold that pretty much caught everyone off guard.
Just take a look at this chart. On January 26th, gold hit an unbelievable record high. We're talking over $5,000 an ounce. And then, bam! Just 4 days later, it absolutely plunged in a brutal sell-off, dropping hundreds of dollars in a single day.
So, this created a massive question for investors and market watchers all over the world. How could a rally this powerful, with so much momentum behind it, just suddenly hit a brick wall and collapse? Okay, let's get into it.
To solve this mystery, we've got to rewind a bit. We need to understand why gold was on such an unstoppable tear in the first place. This wasn't just some random spike. It was really the result of a perfect storm of global events all coming together at once. This timeline really shows it, doesn't it? This wasn't some short-term blip. It was a surge that built up over several years, and it was driven by one global crisis after another. From the uncertainty of the pandemic to massive buying by central banks and then rising geopolitical tensions, each event just added more and more fuel to gold's fire. So let's break down the core drivers of this rally. The first one was this huge global move by central banks, especially in emerging markets, to buy physical gold at a historic pace. Throughout 2025, they were buying more than ever before. And this wasn't just about diversification, it was a very deliberate strategy. And then, driver number two, you had this escalating anxiety, this real fear about whether U.S. finances were even sustainable. What used to be just a theoretical concern people talked about in boardrooms turned into what one source called substantial panic among global investors.
And yeah, this number right here, it just brilliantly illustrates the sheer scale of the problem that was fueling all that panic. With the U.S. national debt screaming towards $39 trillion, gold started to look like the ultimate safe haven.
And a third piece of the puzzle was the market's overwhelming belief that the U.S. Federal Reserve was going to cut interest rates all through 2026. See, lower rates make holding an asset like gold, which doesn't pay you anything, a whole lot more attractive. And traders had aggressively priced that expectation in.
Now, that central bank buying we just talked about, it connects to a much bigger story that was playing out at the same time. The creation of an alternative financial highway, basically, driven by this global desire to depend less on the US dollar.
You see, for decades, global trade has pretty much relied exclusively on something called the SWIFT system. And because it's so centered on the dollar, it gives the United States a huge amount of financial leverage and the power to impose some really powerful sanctions.
But the BRICS nations, they started building a real alternative. After seeing things like the freezing of $300 billion in Russian reserves, they hit the accelerator on plans for a payment system that would let them trade directly in their own currencies, completely bypassing SWIFT.
And this search for a financial safe haven led them straight to gold. It was a huge shift. For the first time in almost 30 years, foreign central banks were holding more gold than U.S. treasuries in 2025. Gold was seen as the ultimate neutral asset, a store of value that nobody else had a claim on. So think about it. You've got this incredible momentum, de-dollarization, panic over U.S. debt, and everyone expecting easy money from the Fed. The wind was seriously at gold's back. So we come back to that big mystery. What on earth could possibly stop this train?
On January 30th, we got the answer. And it wasn't some boring economic report or a central bank meeting. Nope, it was just a single line of text, a political announcement coming straight out of the White House.
President Trump nominated Kevin Warsh to lead the Federal Reserve, the most influential central bank on the planet. And the market's reaction? It was immediate, and it was absolutely severe.
So, why did one name cause so much chaos? Well, the crucial point is this nomination completely upended everything the market believed. Picking Warsh was seen as a signal that the Fed would stay independent, that it wouldn't just bow to political pressure. This absolutely shattered those expectations for easy rate cuts, which caused the US dollar to rally and bond yields to rise, making gold all of a sudden look a whole lot less attractive.
But here's the thing. This event didn't just happen in a vacuum. The shock of that one day really exposed this massive tug of war that's been happening just beneath the surface of the global financial system.
It's like this giant battle, right? On one side, you have these powerful, long-term forces chipping away at confidence in the dollar, the massive U.S. debt, these new payment systems, geopolitical tension.
But on the other side, you've got the enduring institutional strength of the U.S. financial system, represented by an independent Fed and the power of higher interest rates. Gold's rally and its sudden crash were really just a symptom of this huge conflict.
So, in the end, the story of gold's wild reversal isn't just about 1 week of volatility. It's a profound signal of fragility in the global order. It revealed just how quickly the market's entire belief system can be shattered by a single political decision. And it leaves us all wondering what comes next. Was this just a temporary tremor, a brief market correction, or was it the first sign of a much, much bigger seismic shift?